Good day guys, and welcome back to FX. In today's video, I'll be showing you a simple top-down analysis on Euro USD and how you can catch a potential buying or selling opportunities. But before we proceed, please don't forget to like and subscribe to this YouTube channel. Without further ado, let's get started. Okay, welcome back guys. So starting with Euro USD on the monthly time frame, we want to get our buyers. So as you can see on the monthly time frame, we have been having an uptrend. A push up, a push down, a push up, a push down. Now we have a push up again and we have a push down. So what are you expecting? We're expecting another push up to break this all-time high right here, right? So let me zoom in the chart. Now to see it clearly, we have another block right here. So what is an order block? An order block is simply the last bearish candle before a break of structure. So where's our break of structure? We have a break of structure right here. This can also be your break of structure. This is an internal break of structure. This is an external break of structure. So let me mark it out. So this is a break of structure. I just like using this. So let me delete this one. So we have a break of structure and we have an order block right here. If you don't understand the meaning of order block, these are some ICT concepts we use when analyzing the market. So I'll do a video tutorial on explaining all the PDRAs we use. So we have what is called order block. Let me type it out. We have what is called order block. We have what is called fair value gap, right? So I'll be using all this in this video. We have order block, we have fair value gap, we have what is called breaker block, which is also BB, and we also have what is called mitigation block. We have what is called rejection block. Right? So these are the common things we use, and you need to know how to use the Fibonacci tool. So for us to get the premium and discount of any price level. So what is the function of Fibonacci? Assuming we're in an uptrend, higher high, higher low, higher high, higher low, higher high. Now notice is the last high. Now we want to know the exact point to catch the trend continuation. That's where you can use the Fibonacci tool. So the Fibonacci tool, you pick it if you're in an uptrend, the last low that was created, bring it to the last high. Now the levels you should be looking for buying opportunities is within this 61.8 and 78.6 levels. So now within this level you can find another block. You can be able to find another block, or a fair value gap, or a breaker block, or a mitigation block within this level. So, and it's also called a discount level. You know, when you are in the market, let's say the normal market, you go to buy something, you are interested in buying something cheaper, Abi. So you are expected in buying something at a discount price. So now the level below this 50% is called the discount, right? While the level above this 50% is called the premium. So you are buying at discount, and selling at premium, right? You buy at discount and you sell at premium, right? Buy at discount, sell at premium. So this is where we use the Fibonacci tool. Now let me show you how to set the Fibonacci tool. Just double click on your Fibonacci tool. This is my settings right here. You can just copy it. Starting from the styles, you can see my trend line. You can use this color. Now this is the main thing. You just have to activate this, and this. Then you can use my same color I used right here. So this point, I just use these settings, and that's all. So let me delete everything. Okay, let me delete it one by one. So I hope you guys are following. Now on the monthly time frame, price has reacted to this order block right here, and we have what is called liquidity. We have what is called liquidity. So price has swept sell side liquidity. So what is liquidity also? Liquidity, for example, if price breaks structure to the upside, if price breaks structure to the upside, no price is supposed to come to another block, right? Break structure again. Now if price fails to come back to another block and maybe it simply comes there and continue going, right, price will still come back. This zone is a liquidity because many traders will be looking to buy right here, right? So price will do something like this, behave as if it's going up, now sweep all those people buying right here and come back to tap this origin and continue going up. So we have what is called liquidity, which is also inducement. It's just a trap. As price is coming right here, once retail traders like me and you just see this zone that want to start buying, you want to place a long position right here. Even some people can start to buy right here from this point, and they'll be targeting a very long point and put their stop loss right here. Now price will first behave as if it's going their way, then once their stop loss, trigger the most extreme POI, which is any other block, favor lookup, or any PDRA, then price will now start going in the intended direction, right? So that is what happened right here. Most traders will be looking to buy right here. Now price moved up. This is on monthly time frame, right? And price initially swept the liquidity, tapped into this other block. Now we want to look for confirmation. Now what are we looking for? We are looking for buy or sell. We are looking for buying opportunities. So going to the weekly time frame. On the weekly time frame, you can spot a market structure shift. This was a break of structure, which is a liquidity sweep, right? And price shifted structure immediately. We're having something like this: lower high, lower low, lower high, lower low, lower high, lower. Now when price immediately got to the point, it shifted structure. We're supposed to continue downward, but price broke this last high, so we are going to have something like this. So that is what happened right here. So we have a market structure shift. Now we have a breaker block right here. This is what we call a breaker block. So what is a breaker block? Now normally as price is going down, we have what is called order block, right? Price is supposed to tap into this order block and continue, but now price failed to respect the order block and displaced higher, right? So it becomes a breaker block, right? So you can use that as a buying opportunity. Once it's just basically a failed order block. When price failed to respect another block and breaks opposite, then you can take the retest. It becomes a breaker block, right? So there was another block right here. Price was supposed to come right here and continue going down, but because it has reached a point of interest, it displaced higher, creating liquidities again, right? And price finally came to tap the breaker block and it gave a reaction again. So right now I don't need this level again. Now we are focusing on this breaker block right here. We are focusing on this breaker block, and this is a market structure shift or a change of character from bearish to bullish, or from sellers to buyers, right? So now price has respected this level. Now switching to the daily time frame again. On the daily time frame, we spotted another market structure shift. Price broke. We have a break of structure and price shifted structure right here. price shifted structure. Now we're expecting price to come back to this fair value gap. Now why do I want it to come back to this fair value gap? If you take our Fibonacci 2 right here, remember I told you are going to be looking for buying opportunities within 61 and 78. So within 61 and 78 we have a fair value gap right here. Within this point, this is how you mark it, within the high of this candle and the low of the next candle. That's called fair value gap, right? So we also have a breaker block right here again, a failed order block, which is another confluence, right? So we expect price to do something like this, come like this, it's creating liquidity, come do something like this, tap into this zone and continue going. Now our bias now on the daily time frame is for us to join the sellers to bring price down right here. Price can also price can also decide to use this fair value gap, right? But because we're interested in buying at a discount, if we get a confirmation to sell to this point, we are going to sell. But if we don't get a confirmation, we just wait. Price can decide to use this zone to continue buying. Price can reach this fair value gap right here and continue buying. So switching to the 2 hours time frame to find an entry to short to this, to sell to this level. So on the 2 hours time frame, we have this high, lower low, lower high, lower low, right? Now if you noticed, price has changed character, right? Price has shifted structure right here. Now this is the reason why I said price can decide to continue buying right here. You know, we're in an uptrend, but we want to catch the reversal, right? We want to catch the reversal. This is the normal level we expect price. This is the normal level we expect price to come and tap into, then continue going up, right? So because of this impulsive movement, so we are supposed to have a correctional movement. So that is why I'm looking this level as is not valid to take a buy opportunity. And if you are to take a buy opportunity, you need to get a good confirmation. Now for us to get a confirmation using the 2 hours time frame with this fair value gap right here, you go to the 30 minutes time frame, right, and look for a market structure shift again. So we have a break of structure. We also have another break of structure, right? We have another break of structure, and we also have another break of structure right here, and price shifted structure right here. But anytime price shift structure, but before the price, anytime price shift structure and does not come back to the origin or any zone before continuing, you know, price shifted structure right here and went to tap into this zone again. Price went to tap into this zone, and this is a liquidity right here. When price shifted structure, this is a liquidity. Price swept liquidity. Anytime price shift structure and went to clear opposite buy side liquidity, it is not a valid market structure shift. As you can see, price can continue to buy to sell from this level. Now let's see if we can find a selling opportunity. So deleting this fair value gap right now because it's not a valid point to buy. So we have a break of structure right here, and we have, because the market is bearish, right? So we have this is the most recent break of structure, but price didn't fill this other block right here very well. As you can see now price behaves as if it wants to react from here. You see price finally came to take out that high and respected this other block. Now we want to find a reason to sell from this point down, even if you can just target this level for just today is Monday, but we know price is coming down to this level. So switching to the 30 minutes time frame, we want to find something like this after price gets to a key level. higher high, higher low. Price, price is on an uptrend. So once price taps into that zone, it needs to shift structure. Then you take the retest and sell. Now that is what we have right here. Price swept the liquidity resting right here after tapping this demand zone, and we're expecting it to shift structure. Right? We're expecting market to shift structure or a change of character. Right? We're expecting price to shift structure or a change of character. So once price does this, then if price is able to break this level, then I will take a sell. Once price comes back to this zone, then we are going to target this zone right here. Do you guys understand? So it's going to be like this. Now if price is able to break this zone, we can be able to get another block right here, or a fair value gap. This can become, let's just say this is another block. I'll just put my short position. Right here. My stop loss is okay around this zone. Then I'll just target this zone. It's a risk to reward of about 1:3. Right? So if price is able to break this zone, it's very valid. You can sell Euro USD. So that's just my bias on Euro USD. Welcome back, guys. So as you can see, Euro USD is actually playing out. After we got an entry right here, price came down, broke the structure, came back, jumped down again. This fair value gap. So I told you before that this fair value gap is not a valid field. So price came back, and I saw this trend line broken. We had the first touch right here. Anytime you have a trend line that has many touches, expect it to be broken, right? I had the first touch, second touch, and I have the third touch. I expect the fourth touch to be broken. So price broke trend line. We tested it with a combination of a fair value gap, right? With a combination of a fair value gap. So price from this place again, I got an re-entry. Then I entered more positions, and price is now consolidating. So now we're in London session. Price came back to this zone again, now giving a reaction to the downside. I hope you can see well. Now I only use trend line for confirmation if a trend is going to continue holding, but I don't use it to trade. So as you can see now, I only use it to determine if I can add more positions right here. So, and I also have this counter trend line also. We had a first touch, second touch, and now we're having a third touch, which we expected to push price down to our TP, right? And if price does not hit our TP, the reason for this is just to explain top-down analysis for you guys. So top-down analysis is a very good way to analyze the market. So once the market reach our TP, I'll be right back. Stay tuned, guys. Welcome back, guys. So I want to be available to make a video again if price reach our TP. So I just want to make a recap of what I've taught you guys, then we end this video. So if you want to check the result of this trade, you can check my Telegram channel. Just check the description of this video, the group link. Just join and you'll see the analysis and if it reach our TP or our break even. So what was the recap? I told you guys what is order block, fair value gap, breaker block, and inversion fair value gap. So what is an order block? An order block is basically when price is breaking structure. Maybe we're in a downtrend, lower high, lower low. And this is a break of structure, right? Okay, so for price to continue going down, it has to come down and mitigate another block, come down again. We could have something like this. So where's our other block? There's another block right here. Is the origin before the break of structure to the downside, right? We also have a break of structure right here. So there's another block right here. You'll be imagining that why didn't price come back to this origin right here before going down? Now, since we had another block right here and price came to mitigate it, this zone becomes a protected zone and price might not come back to it. And there are sometimes that price will just come back to just a little bit part of it, but sometimes price can just continue using a mitigation block. So this is a mitigation block right here. So this is an order block, right? This is an order block. This is an order block. The origin before a break of structure. This is a mitigation block. So what is a mitigation block? It's just your normal trend continuation, break and retest. Now this zone price failed to take out this liquidity resting right here, this high, and broke down. Now we have a resistance, we have a support becoming a resistance. That's just basically what a mitigation block is. When you're in a downtrend, price will use a mitigation block to continue going down, so we call it mitigation block. But the difference between mitigation block and breaker block is that instead of, price does not have the power to take out liquidity, but on breaker block, price is going to take out the liquidity. Just watch. This is an order block that price is supposed to respect, right? So price, after taking out this liquidity, it's supposed to respect this thing and go down, but to break past the other block, then to now continue going. So this is a breaker block, a bullish breaker block. Assuming we're in a downtrend, right? So once price breaks structure, instead of it to respect the other block, broke it and retest it back. So it's simply a break and retest. That's what is called breaker block. So let me draw for a bearish breaker block, right? So assuming we are breaking structures to the upside, instead of price respecting this, broke down and did something like this. So this is a breaker block, right? A failed order block. A failed order block. We had a break of structure. Price was supposed to respect this order block, flipped and become a breaker block, BB. Right? So this is a bearish breaker block. This is a bullish breaker block. Bullish breaker block. I also taught us, now you have known the meaning of mitigation block and breaker block, right? So what about fair value gap? Let me look for a fair value gap around these zones. So if you check closely right here around this zone, now there's a fair value gap right here. This three candle formation, 1 2 3, you notice there's a gap between this and this. So that's what is called fair value gap or imbalance. So we usually use it as a trend continuation. It can serve as a resistance or support depending on the trend of the market, right? So let's see if price came back and test it. As you can see, price came back and use it as a resistance, right? Price came back and use it as going down. So that's what basically happened. So there's a fair value gap right here too. So anytime you have a combination of a fair value gap and an order block, it's an high probability setup, right? So that is why price failed to break past this order block, right? I got this order block on 2 hours time. Now we got a confirmation on the 30 minutes time. So price swept liquidity and market structure shift. Now I used an inversion fair value gap. Remember I told you inversion fair value gap is also a failed fair value gap. When price is coming, it's supposed to respect it and continue going up, because price has reached a key level, it broke it and it used it as a resistance, right? If an inversion fair value gap is a failed fair value gap, there's a fair value gap right here. Price is supposed to do like this, come back and use it to continue going down, but price reacted to it a little bit, right? and continued down and we used it. So this is where we got an entry, right? So we got an entry right here. Price broke structure again the next day on the London session. It came back again to get, but we're staying. But as at then, I've tightened my SL to around this point, right here. You guys understand? So after price moved and breaked this high, I moved my SL to break even around this point. Now, after price reacted to this zone, I stacked more position because I got the trend line confirmation as you guys as I've explained the last section of the video. So stacking more position right here, but if it is not, let me say it is not good to stack more positions. You must risk according to your capital. So risk management is one of the major thing in forex trading. So if you have risked a particular amount around this point, there's no need to enter more positions right here. But assuming you entered with a small lot size here and you still have more to risk, then and you have this area is a good re-entry. So that's why I took an entry right here again. So I expect price to break structure again. This was a break of structure. I expect price to break structure again, the downside. Now if price is able to break structure, there's something we called market structure. If price is able to break structure, I expect it to just dump down to our TP. I don't, or better still, just use this. What is this? What is this? This is a mitigation block, right? Price failed to take out. If price failed to take out this high and got some consolidation, expect price to break it, then use it again. So that's just what top down analysis is all about. So we'll be ending this video here. Thank you guys for watching to the end. Please don't forget to like and subscribe to this YouTube channel for more helpful video tips and tutorial. Goodbye.